I think investors are also after multi-bagger stocks.
Yeah.
They are also after wealth creators.
Yeah.
So how to really pick wealth creators and how to identify the right price? Because
Yeah.
I think right price is like a very important factor if
Yeah.
you are considering a particular stock.
Yeah, so multi-bagger is very important, especially in equity market where you say invest in 10 stocks. You want them to become multi-bagger and you want to generate 10x, 20x return on your capital. But obviously not all 10 will become multi-bagger. 2 will become multi-bagger, 8 will not do much. In fact, simple mathematics. So if you invest in 10 stocks and 8 becomes 0, you lose 8 because the maximum amount you can lose per stock is 1 which you are allocating, right? But those 2 which can become 10 and 10, so essentially you become that they become 20. 20 minus 8 is actually 12. So identifying a multi-bagger and creating wealth out of this is not a bad idea. Now how do you do that? Multi-baggers are typically companies which are identified at the early stage of their life journey, right? Companies with a market cap of around 500 crores to probably 2,000, 3,000 crores, right? When the stock price value is also less and overall business value, the market cap is less. How do you identify them? I mean, there are various platforms through which you identify stocks. It could be doing your own homework. It could be reading a lot of books. It could be through references of other people. Let information flow in. You learn how to process that information using tools like StockEdge and then get into those stocks. Do not bank on only one stock. Have a diversified portfolio, maybe 10 stocks, so that even if you're right in 2 stocks, you still make money from the market.
Absolutely. And how to identify undervalued stocks?
Okay. So what is undervalued? So it's like for something which is undervalued for you may be overvalued for me. It is a very, very subjective thing because our assessment of companies and their future is very subjective. You may consider that Reliance is probably overvalued because the stock is trading at 2,200, 2,300. I may consider that the stock will go up to 5,000. It is not said. So it's a assessment of the sector, of the company, of the vision of the management, and of the potential of the business. That is a science one needs to learn. It is not a very simple thing that if price earning multiple is less than the industry average, then the stock is undervalued, and if PE is more than the industry average, the stock is overvalued. It can't be as simple as that. There are stocks I have seen who have been expensive, and they have been expensive throughout. Maybe SDFC Bank, maybe Asian Paints. They have been expensive stocks for many, many years, and they will probably still remain expensive. But you may consider them to be overvalued. But people like me consider them to be undervalued.